It's been an interesting year to say the least, and not so great of a year for the market itself. Obviously, everybody knows that, but anyhow, um, so lots going on. Real quick, I wanted to show you something I found that I thought was kind of interesting. So you can see a chart of the S&P here since the beginning of the year, right? There's the beginning of the year. It's kind of interesting. I'm trying to think. There was another year. This was way back. I don't remember if it was 2015 or 2016, but the market basically opened the year and just started tanking right, right at the beginning of the year. And the funny thing is that, typically Wall Street attempts to be extremely optimistic at the end of each year, and everyone's coming up with their predictions and what they think the market's going to do in the following year, and all the Wall Street firms have their price targets and all that good stuff. And what nobody really expects is that a new year starts and then the market immediately starts to tank. But that happened, back 5 6 years ago. I remember it, and I'm pretty sure that, as I recall, that market lost about 11% in the first couple of weeks. Like right off the bat, it just started dropping. um, and so this year kind of reminds me of that a little bit, right? I mean, we had what, five down day, the first trading day of the year is right after New Year's Day or whatever, but I think this was like the January 5th, and this high right here, and that was the all-time high. Also, that was the all-time high for the market in the history of the world. And then it kind of, pulled back a little bit, bounced a couple of days, and then that sell-off probably, took a lot of people by surprise. Um, and so anyway, my point here was that I found this graph that that basically shows. So I guess this is roughly where we are now, I believe. Obviously, this was it says data as of June 28th, so that was as of the close yesterday. And basically, what you can see on this graph is that this is the worst, first half of a year since 1970. I mean, think about that. 1970, my goodness. And so, yeah. So I thought this was kind of interesting. Honestly, I thought it was an interesting chart, and it basically it's just showing the damage that this year has brought on to the S&P 500. Look at that. This what's really interesting about it is, everybody likes visual data is to kind of, most years, the first half of the year, the market does pretty darn good, right? It seems to me that about 3/4 of the time, the first 6 months of the year are positive, and as you can see, there's a lot of years here where, by the end of June, by the end of the first half, the market was already up well over 10%. So it kind of looks like maybe 10% is about, the average, roughly, maybe a little bit lower if you average the numbers. But anyway, it's an interesting chart because, I mean, worst start to a year, 6 months into the year, we're fluttering around bear market territory. I guess you could say 20%. So, interestingly enough, and these aren't exact figures, but the Nasdaq is down roughly about 30%, and the S&P's down roughly about 20%, and the Dow, the three major indexes, the Dow's only roughly down about 15%, which is kind of interesting. And the small caps, geez, I don't even know. I don't. Yeah, occasionally I look at the small caps, but there's some big problems there as far as, and I've seen some statistics as far as like, the Russell 2000. But anyway, the Russell 2000 is obviously it's 2000 stocks, which is probably one of the better representations of the overall market. But anyway, when I talk about the market, I'm talking about the S&P. Years ago, I used to say that the Russell 2000, which we could just look at real quick here, as long as I get this chart up. Russell 2000, I think, in years past, has always been sort of my favorite kind of benchmark for what the average stock is doing, right? And quite honestly, this year, so far this year, it seems like the index is probably holding up better than the average stock. Something interesting about what we saw yesterday, and I saw somebody comment that as bad as this year's been, and these big sell-off days and all that, someone commented that under the surface that yesterday had to be in like the top 5 worst days of the year, which it doesn't really look like it on the chart. I see quite a few longer range days down than yesterday, but what was so insidious, I think, about yesterday was the fact that I think the majority of participants expected that the current little rally that the market was experiencing off of these recent lows, last week, this little rally, I think everybody was sort of, I don't say everybody, but the majority of participants were expecting it to at least get the S&P 4000, right? If not higher. Um, it was one of those sort of short squeeze type scenarios, and in the past, back in March, huge rally off of those lows, and then even in May, off of that low, the rally was pretty significant. And so and of course there was this gap here, right? Now we filled the first gap. This waterfall sell-off, by the way, was kind of unusual, I thought anyway, because you don't see that too often. You don't see a 3-day sell down where you just have long range day down, gap down, another day down. These 3 days in a row here, they did a lot of damage, I think, to market psychology, and of course, obviously, the market itself hit a new low. And I think back here in May, this pivot low right here seemed like a lot of participants thought that was the low. And so what we're seeing here is a series of lower lows. And so the market has been very sort of insidious in its behavior, and I guess that's what that's what bear markets do. So whether wherever the 20% off the highs line, I should probably put that on my chart, or at least make a mental note of where exactly 20% off the highs is. But because as of the open yesterday, the S&P was probably less than 20% off the highs, or I'm sorry, off the lows. And so I mean, when does a bear market end? When the funny thing is, the definition of a bear market is also sort of debatable these days, right? And a lot of people sort of make fun of the idea that a random number like 20% constitutes a bear market. But anyway, a couple things to note here. There's the 200-day moving average, and the thing about the 200-day moving average is, and that's one of the things that most people, when they first start, reading technical analysis books or whatever, the big thing is always, good above the 200-day moving average, bad below it, But this is, you can't really, it doesn't usually make for a good timing indicator, and this year is pretty much proof of it. Now that doesn't mean that, since the market's below the 200-day moving average, I mean obviously that's not good, but the idea that, it broke below it and above it and below it and above it and below it all these times while it was kind of, still sort of pointing up or whatever, is a good indication that that you couldn't just, imagine selling here and then buying here and then selling here and then buying here and then selling here. Hey, I mean, finally when it broke it, you'd have been on the right side of it. But more than anything, it's just sort of most indicators are just like sort of visual reference points. Um, right here. There's the 50-day moving average crossing down through the 200, so that's the proverbial death cross, which happened here in March. And of course, it happened with the market right around the lows at the time for the year. And then, what happened is humongous rally that even broke above the prior highs. And we talked about how insidious that was, right? I mean, this market is really on sort of a day-to-day, week-to-week basis. I think that this market is besides individual stocks getting hammered, um, I think that it's really throwing a lot of people for a loop, and it's a tough market. um, let's see if this is the proper chart that I wanted to look at. Yeah, this is it. This particular chart here, which is kind of interesting to me anyway. This is a weekly chart, right? First thing that stands out to me is that assuming that this week's going to be down, I mean, you never know, but there could be some sort of miraculous rally, today and tomorrow, but highly unlikely. But what I was about to say is that, so, the red bars obviously are down weeks and the green bars are up weeks. And so what we're going to most likely close the week here is with 10 out of the last 12 weeks, 10 out of the last 12 weeks being down. What's most interesting about this, and of course, this particular trend line here that's the big kahuna, so to speak. Because I mean that's the trend line that basically is going to act as major overhead resistance. Should the market decide that it wants to rally up there. The most interesting thing about this chart and the trend line you see down here is that. And I don't even know why I did this. I mean, there's a bunch of other trend lines I can draw on the chart. And quite frankly, you've seen the chart where I have the trend line that basically goes up across the highs and gets broken, up here this week. But what I thought was interesting about this is that for some reason, I connected those two lows. And I did this, kind of recently when the market was selling down here, but I thought it would be interesting to connect these two lows and extend it out, right? So I have it extended out to the right. And lo and behold, that, the low for the year a couple of weeks ago is darn close to actually, finding support on that particular trend line. So this is kind of interesting coincidence. I mean, the thing about different trend. Well, here's the other chart that I have. Let me pull this up and see how it looks here. Yeah, the interesting thing about this is sort of my main trend line chart here, and that's on the daily, and so you can see where the weekly is a little bit cleaner, obviously. So this is my main chart, kind of bigger picture type thing. And of course, every time I fool with these things, these trend lines seem to move a little bit, but yeah, it's close enough for government work, as they say. And basically, you'll see trend lines, like obviously. Oh, and the other thing about this is, for some reason, a lot of my charts keep defaulting to log scale, which which is annoying, but let me see if I can just save it. Not log scale. That just started happening recently. Like, and obviously log scale charts are can be useful and are useful for looking at larger time frames, but I'm so used to linear charts, and so yeah, and so look, my trend line's actually moved since I changed it, which is even more annoying because I know for a fact that when I originally created this chart, I had it on linear scale because that's what I use. So, but anyway, long story short, what you see here is off of the pandemic lows, right? The Fed, threw everything they had at saving the financial system and the market, um, and everything, right? And so I see these numbers thrown around like 7 trillion, 5 trillion, 7 trillion, 11 trillion in pandemic stimulus relief, whatever. I guess who knows? But anyway, that's obviously what created this condition, and consequently, which is created the condition where um, that we're facing now, right? Which is soaring inflation. And the funny thing is, I mean, inflation's been bad for years. I mean, for one thing, back before the pandemic, they pretended that there was no inflation. The Fed was, constantly talking about, reaching their 2% inflation goal and this and that. And then, this pandemic here, really sort of threw everything off. It created sort of a, a whole new paradigm as far as the world and financial markets. And so now we're seeing some of the repercussions of that. Obviously, they created the conditions for a lot of by increasing their balance sheet and doubling the money supply in a short amount of time. They created the conditions for you know rampant speculation, right? And yeah, I've been saying for a long time, reminds me of the dot-com days, right? I mean, I was around during the dot-com days and just kind of getting, interested in the markets like so many others. And so I witnessed the rise and fall. And so, over the years, you see things that I've seen lots of things that remind me of the dot-com days and rampant speculation. And of course, last year got crazy with all the SPACs and the IPOs and companies that you'd almost laugh about IPOing, and the crazy sort of speculation, especially the SPACs, right? And then the public really got involved in stocks a lot, and you guys all know the story. But anyway, so here's the problem right now is if you just forget about everything I've talked about and look at things objectively, the market, we've crossed the summit, right? And obviously the trend is down now. I mean, that's here the trend was up, obviously, and now the trend is down, obviously. And when the trend is down like this, and especially when you get the kind of sell-off we've seen, which is largely due to macro factors, but if you just look at it objectively, I wanted to go back to this chart here. This is a 30-week moving average that I have on this chart, and I can't remember exactly where I read or why I decided to use a 30-week, but 30-week moving average on a weekly chart basically, is kind of one of those things. It seemed to fit pretty well. Um, you notice it broke above the 30-week, kind of hung on it here, pulled back close to it, stayed above it, touched it here and bounced off. Once this 30-week broke, which was about a week after, well, I mean, it was a couple of weeks into the year when the 30-week broke, but that was basically, the last time that the market had been below the 30-week, was back here when it was trying to recover from the pandemic sell-off, which by the way was like, about 35% from intraday high to low in a very short amount of time. 4, I mean, literally like 4 weeks, right? And of course, that big pivot low kind of, bullish engulfing candle, if I had candlesticks on the chart right here, that low is when the Fed basically pulled out everything they had out of their arsenal. I mean, they immediately lowered interest rates to zero and announced, trillions in QE, basically. I guess what call it nowadays and basically they were trying to prevent the economy from, seizing up, kind of like a 2008 style thing. And so when they did that, I guess, that was the green light and I mean, I remember Fed guys on CNBC saying the Fed has unlimited money to throw at the economy to keep things rolling. And so that was down at the pandemic lows. But crazy thing about it, which I recall fairly well, is that, and it's interesting, to kind of review this stuff from time to time, because the big takeaway from this is that the market dropped, roughly, I know it was 35% from intraday high to intraday low. And so when you talk about this drop, you can characterize it in a number of ways, but one of the ways is that basically in 4 weeks, 4 weeks, you're looking at probably, it was roughly probably 25% sell off in 4 weeks, which is astounding in how fast that it happened. And I see charts nowadays that actually show a recession like right around here, right? A really super thin, like 1/4 recession or whatever. It's kind of weird because the big debate now is, whether we're in a recession or not. So the Q1 GDP came out revised. So for last quarter, January, February, March 2022, Q1 GDP was minus 1.6%. And so I guess, sometime in July, we'll get a look at the second quarter GDP, which is now, the quarter hasn't ended, obviously. And if that's negative, that was the old theoretical definition of a recession is 2 quarters of negative GDP growth. And so that's what everyone's debating now, whether we're going to have a recession, whether we're already in a recession. And so, I mean, debating the minutia of, whether we're in a recession or not, or whether we're going to have a recession, seems like, it's kind of like the whole bear market thing I was just talking about, where 19% is a correction, but 20% is a bear market. It's the same sort of thing. If all the economic numbers are on the verge of recession, well, then arguing about the fine points of whether it's a recession or not are kind of moot because I mean everybody knows, hey, the price of everything's been going up, and so you hear the word stagflation tossed around a lot. I think that, quite honestly, I think that the destruction of wealth in the stock market, for one, and things like Bitcoin, which I never really talk about. I mean, Bitcoin was, 60 something thousand, and now it's 20,000. And man, over the years, you've heard so much about it, and these guys on CNBC, and professional money managers and big institutions and all this, just they've been hopping on board. And so, I'm sure that something like, Bitcoin being down from 60,000 to 20,000 is probably, a lot of money evaporated there. And we haven't even talked about things like we haven't even talked about things like NFTs and that type of thing. So, which I don't follow either, but been a lot of destruction there. So it's a mess out there. I mean, and so what happens is you have all these people that had a lot of paper wealth out there, and a lot of paper wealth has been destroyed. That makes people rein back their spending and feel poorer. At the same time, prices are going up, and this whole thing with oil. I mean, see, and I'm not the first one to say this, but the Fed cannot control the price of oil. And so what you got here is this whole oil over $100 scenario that we've seen recently is going to lead to, or cause, or is in the process of causing persistent inflation, because it costs so much money to move things around, right? Think of the and diesel fuels is the big thing. That's the thing to kind of keep your eye on. I don't even know what the chart of diesel fuel looks like, but I know, obviously it's so obviously it doesn't even need saying, but every single thing that you buy at the store, every single restaurant in America, they're getting all their goods delivered by trucks using diesel fuel, and with the price of diesel fuel having, tripled since back in the day, that's going to be one of the main contributors to inflation. So you got, slow to no growth. You have inflation, the highest it's been since the 70s or 80s or whatever, and the Fed embarking on, and so it's a mess. It's no surprise we're in a bear market. The thing of it is, I mean, obviously the big question is, are things going to start improving anytime soon, or are they going to get worse? And I'm not sure. I'm not sure that the sentiment, I think I get the feeling that the prevailing sentiment amongst, average investors is that we're going to see something similar to, the rally off the pandemic lows. And this is just a very short term type of thing, and the market always, sells off and then finds bottom and just rallies back up, and I'm not personally not so convinced about that, but going back to the chart, since we're talking about the market again, basically it could flounder around. Right now, I think the over and under is S&P 4,000, and that's still a long way up. If we go to if I switch to the daily chart, S&P 4,000 is, and now of course, this is going to be a 30-day moving average, so I don't know how useful that is, but anyway, this market's going to do what it's going to do. Let me go to a different chart because I want to get those trend lines off of there. There we go. There's also, on one of my charts, I got a trend line drawn across these highs, right? And I think last week, actually I remember which chart it is now, but I just went ahead and dropped another one on there. So the weekly trend line I have is off the very high at the beginning of the year, off of, across this high, so it's like well above that. But on a shorter time frame, on the daily chart, we have this downward sloping trend line, and interestingly enough, it's sort of, intersected. Well, actually, it's kind of dropping below 4,000 on the S&P. So I don't have the SPY up here, but so that's something, because going back to these two gaps here, I'm pretty sure that the majority of participants expected this current rally to take, and it's still, it still could. I mean, yesterday could have been a shakeout and we could rally from here, but it's, today and tomorrow, and even, yesterday, this week in general is, last Friday, I believe, was end of quarter rebalancing for institutions, right? Yeah, it was like Russell rebalancing or something like that. And that always kind of, certain things lead to market conditions that are not necessarily, I mean, I don't know how to say this. Certain things happen that create market conditions that are not necessarily, consistent with what the market would do. You basically like end of quarter window dressing, right? As we're talking about now. And so, today and tomorrow, hey, the market could rally back up. I'll be honest with you, I'm not even sure why yesterday got so ugly. I heard that, I saw some stuff where Powell was speaking this morning, and typically ahead of something like 4th of July, you get some craziness in the market, and of course, end of quarter window dressing between last Friday and this Friday. So we'll have to see where everything settles, and then, over this long 4th of July holiday weekend, I can look and see what the weekly charts and the monthly chart, right? So the monthly chart is, I'm not going to bother bringing that up. I don't want to stay on here too long. But anyway, the trend's down. It's a bear market. Tons and tons of stocks are down. It's just a mess out there. Tons of money has been, destroyed this year. And, the funny thing is, it's not funny, but just like going through my list of stocks that I watch, like, look at this. Here's AMD, the semiconductors, which are kind of, they're kind of a bellwether sector, honestly. Semiconductors are a bellwether sector, but these stocks like AMD, I mean, this thing has just been a darling, right? And, I looked through lots of charts that peaked. The markets peaked at the beginning of 2022, the indexes, but I looked through tons and tons of stocks that peaked last year. And so, I mean, the highs were last year, not so far this year. But anyway, look at AMD. It barely even caught a bounce on this latest rally, and then, boom, I think it got downgraded today. Stocks like Nvidia, I mean, these are, something like Nvidia is one of those, Wall Street darlings. All the funds were in these, a lot of, well, I would say all of them, but I mean, there's so many stocks that were kind of, the poster child stocks of the bull market have just absolutely been decimated, and so, quite frankly, I mean, Facebook changed its name to Meta and changed its ticker symbol, but I mean, look at this. Whoops, I didn't mean to do that, but there we go. Screwing around with the charts, looking at these things, I almost always, I use sort of the pandemic the pandemic, pre-pandemic high and the pandemic low is it's kind of a reference point, I suppose, right? Because I mean, where was the stock before, all this craziness started? And so you can see, there's where it was pre-pandemic. And then of course, you look at the high and you look at where it is now, and I mean, you know, at one time, Facebook or whatever was probably, I can almost assure you it was probably one of the most widely held stocks, in America, right? Maybe it still is, I don't know, um, but over all these years, we talk about large cap stocks and how, the larger the market cap gets, the more money goes into it, and we'd see periods of time where, the market sucked for the majority of stocks, but all the large cap stocks did great and held up the indexes. And so anyway, long story short, when you see this kind of market cap destruction, and that's basically what we're seeing, is market cap destruction just all over the place. And not to mention like something like Walmart and Target. Huh. I mean, Walmart and Target kind of reinforce the idea. Let's see, interestingly enough, it's kind of hard to see the pandemic. The pandemic, effect on Walmart was just all over the map. It was like if that was an EKG, it was having a heart attack. And same with Target. So, Target's got a little bit, you can actually see the pandemic high and the sell-off there. But anyway, what these charts are showing, look at Home Depot. And I don't really follow the retailers that much, but what these charts are showing is basically, and the idea I think I was trying to drive home here is that the market cap destruction is, I saw something this morning that said that more market cap has been wiped out of the market than the dot com implosion, right? Already since the highs. And quite frankly, you take a longer term picture and the market's just barely, well, 20% off the highs, but over the longer term, it doesn't look that good. So I think everything's going to boil down to earnings and earnings revisions and the S&P earnings, and so that's going to be the next thing everybody talks about. But real quick, we have one open trade and up, up a couple of bucks, 3% today, but it just kind of got caught up in this sell-off here, and so commodities have been volatile. And I don't know how this falls into trading along with other commodities or whatever, but it's kind of holding its own here, or it's trying to hold its own, and so it's trying to hold its own, right? There's the 50 and 200-day moving average, and it's kind of vacillating above or below it. But, today, catching a little bounce. And so, ideally, we're gonna see a big sort of cup up towards these highs. But this thing moves kind of slow, and that's good, actually, right? I mean, fairly, I say fairly small percentage moves, and of course, 3.5% is a pretty big move, but that's just how this particular thing trades. We actually have a few pending trades right now. Let's look at those real quick, and I'm gonna wrap this up. So this PSX. I mean, this is typically how things work is, pretty decent uptrend, right? Let me do something here. what is it that I want to do? I want to go back to AMD here. Nope, that's not what I wanted to do. All right, well, let me just, sorry about that. What I wanted to do, there we go, is I just wanted to sort of draw a trend line across these lows. Whoop, there we go. That's what I was looking to do. Just kind of draw an upward sloping trend line, and the point I'm trying to make here is that, and of course, you know, the entry on this, when they first hit the list, the trigger is typically well above the current price, and so it's, you know, up here somewhere. But the idea is that stock is in a nice sort of primary uptrend here, and, you know, got a little crazy parabolic right there, right? So this is Phillips 66. I can't tell you the last time I saw a gas station, but apparently I think they're oil and gas and a refiner and all this stuff. But this is, you know, it's a pretty good potential swing trade setup, and theoretically, um, this is a pretty nice dip too. Still in an uptrend, and so, you know, maybe it sells all the way down to this trend line, kind of like it did here. I mean, this is, I hate to draw too many lines on this chart, but oh boy, that is annoying. It's like these charts, they add features to it that make it more annoying, like, than it was. So, I mean, it's you know, I've been complaining about these things since I first started using them, and the funny thing is that, you know, every few weeks or couple of months or something, they change something that makes it even more frustrating to me. So, but hey, that's just me probably. Anyway, what I was about to say is that it's a little bit different of a sell-off, but, you know, nice long duration sell-off. But this consolidation back here, that's, you know, and obviously, you know, it was the end of last year, but ideally, you know, this would come down to this area, consolidate and turn back up. But what we see a lot more lately is this crazy, you know, I mean, this could potentially turn out to be one of those, you know, sells down and then reverses and just V's right back up. Because when this thing goes on starts moving higher and goes on a tear higher, in the past anyway, it tends to really, you know, just out of nowhere sort of rip higher. And so that's something to keep in mind. And so I, you know, obviously have no idea what it's going to do, but ideally it would sell down a little bit more and sort of base out and then turn higher. But there's every possibility. And so the whole idea is like, hey, you know, I wouldn't say to buy this here. Obviously, that's kind of not what we're doing. If you've been around for a while, we're not saying that this stock is a buy right now. This is a pending trade setup that's going to, you know, set up and then theoretically, you know, set up properly for a swing trade out into the future, which, you know, could be weeks or a month from now. Um, we've had a whole bunch of stocks on the pending list that never triggered in so far this year. That's kind of why it seems like there's been very, very little activity. You know, part of it is that the system, I suppose you could say, is smart enough that it was able to avoid all the damage. I mean, you know, just kind of blindly buying setups for swing trades so far this year has been a losing proposition, as most of you probably know. And so, you know, the system's been, I'd say, you know, extremely selective. But man, we've had a bunch of stocks on the pending list that just never triggered in and then ended up breaking down and then getting deleted from the list. Like I can't remember all of them. Like U.S. Steel was one, right? It was this sell down here and this little sort of consolidation area here, right? Before, yeah, you know, like back over in this area here. Whoop. It's hard to back over in this area, right? There was every possibility that this thing was going to base out and turn back up, right? And lo and behold, it broke down and just it never hit the pending list, right? I remember, back towards I think it was back towards the beginning of the year. I think Ford was on there. Look at this. What a disaster. Jeez, Ford Motor Company. I don't even know why this is such a disaster, quite honestly, because I don't, follow it. But I mean, look at the rally at the beginning of the year and how it's just broken down. So anyway, there's been a bunch of them. Back to the pending list. So there's been a bunch of pending stocks. They never triggered in. They broke down. They got deleted from the list. The same thing could happen here. This thing could, keep heading down or whatever and then break below this and lose these lows. And I mean, hey, who knows, right? Theoretically and hopefully, I mean, the the price of gas, the price of oil and gas will come down some. And so a lot of these energy stocks are a little dicey. All right, real quick, MOS, same sort of situation, nice uptrend, nice overall sort of uptrend, obviously, and it went sort of kind of parabolic there. Now it's come down, but, this is also setting up for a swing trade. And of course, it's got to base out and turn back up, right? And so, that's the idea, is that stocks will hit the pending list when they have some potential, and that potential is, for the setup, is typically out in the future. Last but not least, this one's been on the pending list for a while. Didn't trigger in over here, but it looks like it came pretty close to breaking down, but it didn't break down. And so this thing's been on the pending list for almost a couple of months, but I suppose there's still some potential here. Still some potential. Sometimes I see it all the time. Like the first sell down, and where you think it would bounce doesn't hold, and you get sort of another leg, and you can look at different things on the chart, and then it turns back up. So this one's sort of hanging on by a thread. I kind of expect that there'll be some more that can hit the pending list. Now the thing of it is, whoop, I hate when that happens. Forgot to put my dollar sign in there. The thing of it is, if the market continues to act bad, then we don't want to have a bunch of open swing trades, right? That's all. The whole point of it is not to have, not to be holding a bunch of swing trades just for the sake of it in this type of market environment. And so, quite frankly, the idea of sort of being extremely selective and cautious and sitting on the sidelines and that, is so far this year has been the thing to do. And so, eventually, and I guess in a few weeks we're going to be heading into earnings season, and that's going to be the big thing. When these companies start coming out with earnings, if we start to see, after this, we got a 3-day weekend coming up. So after the 4th of July weekend, I think that we're going to see a little bit more about the real nature and the real state of where things are. I don't know if we're going to see a bunch of, pre-announcements, earnings pre-announcements, warnings, or if they're going to wait till they come out with earnings. And the thing of it is that every company now, has tons and tons of excuses on, why things might not be so great. Right? I mean, they can blame inflation, they can blame the consumer, they can blame Russia, they can blame the high price of oil, they can blame inflation or whatever. They can blame the slowing economy. That's basically what happened with Target, if I'm not mistaken. If you think about it, I mean, no matter how great of a company Target is, they're at the mercy of, what the consumer is doing. And so everybody knows the consumer spending more of their money on gas and more of their money on food and groceries and that. And so at the margin, that typically means they're going to cut back on discretionary spending. And so it is what it is. And so anyway, yeah, my point was that this coming earnings season is going to be pretty enlightening. And um, I would say one other thing here is, and I see this a lot, is for whatever reason, everybody always wants to. I don't say I like to say everybody, but market participants, people, guests on CNBC, just everybody involved with the market, with an opinion or whatever, is always looking for the bottom. I mean, is the low in? Do you think we've seen the lows? Are we close to the lows? How low could we go? And so it's like, and I mean, this is just kind of the mentality of it, but it's like, everybody's looking for like the low so they can buy because, because they're conditioned to think that, once the low gets hit, the market just turns right back around and it's back to the old days and everybody makes a fortune because all their stocks go up, and so, and that's why, these bear market rallies or whatever. But here's the funny thing is that literally, like, out of these, 10 out of these last 12 weeks are down. A couple of weeks, 2, 3 weeks into this, everyone was expecting an oversold rally. And then going into the following week, everyone was expecting an oversold rally and expecting an oversold rally. And so, going into every single week, on this, and I'm just talking about like the last leg down here. It's like, CNBC asks every guest, have we seen the low? Are we getting close to the low or whatever? And going into every new week, people are expecting an oversold rally or whatever. And quite frankly, I mean, it's just been a losing proposition, right? I mean, obviously there's some really quick day trades that can be made, holding the stock for a couple of days when the market's, acting like, it wants a short squeeze high or whatever. But from, sort of a medium term perspective, from a swing trading perspective, right? From a longer term perspective, there's no reason to get in front of this, and there's nothing about this that says that it's just going to turn around and rip right back to the highs. If anything, people are becoming aware of how difficult the macro environment looks going forward, and they're lightening up. Especially, institutions. I kind of get the feeling that the institutions are trying to encourage the public to buy, and their ulterior motive is they don't want to be left holding the bag. So yeah, I could be totally wrong. I mean, but so far, what we've seen is, since the beginning of the year, is, sell off, rally, everybody gets excited, thinks the worst of the sell-off's over. Another sell-off and a lower low and a rally, and everybody gets excited and thinks the worst is over, and it's just a repeating progress, right? And I mean, we're just now coming off of like what, the 1, 2, 3, I don't know how to, whether to count this as 1 or 2, but there's 4 or 5, lower lows and rallies, and this little area right here, I remember that consolidation. It was kind of wacky, and I know for a fact that the consensus was that it was going to break out to the upside of that. And it seemed like, kind of seemed like it was. Like, I personally, I kind of thought that that looked like when you get a rally up, like there was, three white soldiers, like you see in the in the technical analysis books, right? Three white soldiers, and then you had this, you know, three, six, 8-day consolidation here, like sideways in this range, and then everyone was kind of optimistic that it was going to break out of the top of that range. And remember, I was pointing to like these three highs. I was like, yeah, break out of here, and then we're going to, we'd be looking at testing this. And so I think that the consensus was that this consolidation, the breakout of it, was going to trade higher, and then you could get a rally like that all the way up to here. But and then um, that right there, that runaway sell down right there, I think really busted a lot of narratives. And obviously you've seen, like, the sentiment's bad. People kill me that these guys, they come on TV and they're like, oh, well, the sentiment's so bad now and this and that. And I mean, the reason the sentiment's bad is because stocks have been getting crushed and killed, and people are losing money, and everything's going down, and the market sucks. And so they act like that because the sentiment's bad, that the market has to go up, which I mean, if you remember, like 2008, the sentiment was pretty bad too, because the economy was falling apart, right? And stocks were getting crushed, and companies were going out of business, and consumers were losing their jobs. And so, just because sentiment's bad, there's a reason for that. And so, if anything, that should make you cautious. But anyway, so we'll see how this pans out. I mean, we have minimal activity happening, but at the same time, that's probably the best thing. So anyway, I hope everybody has a fun, happy, safe 4th of July weekend, and I will see you back here next week.